Stocks slip on Trump diplomacy woes, S&P 500 bucks weak trend. U.S. stocks closed mostly lower after bouncing around Thursday as concerns about President Donald Trump's approach on foreign affairs amid spats with key allies and trade partners cast a pall over the market. A round of headlines from Trump's administration included a decision to put Iran on notice over potential new sanctions and testy exchanges with the heads of two of the U.S.'s best allies and trade partners, Australia and Mexico. The Dow Jones Industrial Average minus 0.03% fell 6.03 points to close at 19,884.91 while the Nasdaq Composite COMP, minus 0.11% lost 6.45 points, or 0.1%, to end at 5,636.20. The S&P 500 bucked the trend to edge up 1.3 points to finish at 2,280.85. Every day there is a news explosion that is hijacking airwaves, pushing aside fundamentals that should matter to markets, like earnings, said Thomas Siomades, head of Hartford Fund's investment consulting group. You would think markets would be in a good place as earnings are coming stronger than expected and the Fed is not in a rush to raise rates due to some softness in the economy, Siomades said, adding that investors perhaps are growing skeptical of Trump's promised policies as there have been few details. Some investors saw the Federal Reserve muddling the outlook for the timing of its next interest rate hike at the close of its policy meeting Wednesday as reason to rethink the trajectory for equities. The FOMC was on hold, with a slightly hawkish bias. The market response was to buy the yen as equities wobble, said Kit Jacques, global macro strategist at Societe Generale, in a note on Thursday. He said the market is suffering from the continuing bickering about currency levels between the U.S. administration and Germany, China and Japan. Stocks logged modest gains on Wednesday after the Fed held steady on interest rates and offered a positive view of the economy, but the central bank declined to telegraph the timing of its next hike, which fostered some concern that the Fed may fail to produce 3 interest rate increases in 2017, as its most recent forecasts imply. But political actions appeared to command attention away from market fundamentals and the economy. Late Wednesday, the White House delivered a rebuke to Iran over a recent ballistic missile test, warning that the country could face new sanctions. Trump also reportedly told Mexico that he might send U.S. troops to the country to stop bad hombres, according to news reports. And Trump tweeted that he would be studying a dumb deal with Australia to take in thousands of illegal immigrants. That came after reports he berated and hung up on Australian Prime Minister Malcolm Turnbull on Saturday. Given the lack of clarity on how Trump will tackle trade, tax cuts and infrastructure spending, Stephen Ricciuto, chief economist for Mizuho Securities USA, recommended investors brace for a sudden shift in sentiment. When I assess what we know about a broad Trump economic strategy, which is still very limited, it could be either very good for the economy or very bad. There is no middle ground, he said in a note. Other markets, European stocks SXXP, minus 0.34% were mixed and the Eurorist, minus 0.0372% strengthened, making exports more expensive for multinational companies. The Nikkei 225 index NIC, plus 0.00% finished 1.2% lower on yen's strength HJP, plus 0.23%. The dollar slid to an 11-week low after the Federal Reserve seemed to quash hopes for a March rate increase at its meeting. The decline in the greenback since its peak in late 2016 has helped shares of companies with significant international exposure, particularly those in technology and materials sectors, outperform domestic-oriented companies, according to data from Bespoke Investment Group. Stock prices of U.S. corporations that generate more than 50% of their revenues abroad rose 3.8% since the end of December versus 0.4% for companies focused on the domestic market. A weaker dollar makes U.S. products more price competitive in foreign markets. Gold prices GCJ7, minus 0.32% climbed 0.8% while crude oil CLH7, plus 0.60% was off 0.3%. Economics, market reaction to economic data was muted. The number of Americans who applied for unemployment benefits at the end of January fell by 14,000 to 246,000, an extremely low level. The data came on the heels of better-than-expected report on private sector hiring on Wednesday and ahead of official non-farm payrolls due on Friday. Separately, American companies and their workers were more productive in the fourth quarter, but labor costs in 2016 rose at the fastest pace in 9 years, a potential sore spot for the economy. Earnings: Facebook Incorporated FB, minus 1.79% was down 1.8% after opening above $133. The social media network posted stronger than expected fourth quarter earnings, and advertising revenue soared 53% year-over-year. Analysts began raising price targets in reaction to that news Thursday. Read, Facebook's growth may have peaked, so what's next? Philip Morris International Incorporated PM, plus 3.01% beat Wall Street expectations, showing revenue rose 9.1% in the latest quarter, helped by a big boost from the Asia-Pacific region. Shares were up 3%. Ralph Lauren Corporation RL, minus 12.32%. Shares sank 12% after the fashion retailer delivered disappointing quarterly results and announced its chief executive will step down after less than 2 years at the helm of the company. Shares of Deutsche Bank AGDB, minus 3.62%. DBK, minus 4.96% were down more than 5% after the German bank posted a $2 billion loss on legal costs. Shares of Mead Johnson Nutrition Company MJN, plus 21.41% surged 21% after Reckitt Benckiser Group plc plus 4.08% confirmed it is in talks to buy the baby food maker.